Howdy. Welcome back to Dion Talk. The correction is here. The expected, recurring, annual correction that happens every year, month on month, is here. You are going to see a lot of videos coming out that talk about the crash or the correction, depending on which word the content creator thought would get more views on their video. In my opinion, for there to be a crash, prices have to be lower than where they were last year. There are times of the year when we see prices go up and down. In the summer, when people can move their families without the disruption of a child during their school year, during the actual school year that they're attending, sales go up. End of summer. Some years, most years, it's July. Some years, it's August. Prices dip back down because less families are moving, which means less demand. And home buyers are the biggest competitor to investors. A lot of people are worried about the iBuyers and the financial institutions that are buying real estate, but our largest competitor is a home buyer. Last year, there is this meme, and I want to break it because here's the correct meme. Millennials represented 37% of home buyers until last year. It went up to 43%. So as an investor, our largest competitor is home buyers, and home buyers buy during certain times of the year. So right now, you're going to see a lot of videos coming out talking about prices going down. There are over 300 markets, and with all of the places I was able to look on, Redfin and Zillow, and from NAR, the National Association of Realtors, there are only 2 markets where prices are down year over year out of over 300 markets: San Francisco and the Bay Area. Somehow, that's not the same place. So prices are still up across the board, except for those 2 markets. But you're going to see month over month data showing that prices have decreased. You're going to hear content creators talking about days on market are up. 17 was the record low that I remember. Last year it was at 21 days on market. We ticked all the way up to 25. So 60 days is a healthy market, but we've ticked up some. So you're going to hear people talking about probably they'll put it in a percentage ratio because on small numbers, that sounds like a big amount. You're going to talk about inventory. Everyone is going to say inventory causes a crash. In 2008, 2009, because of all of the inventory, there was a crash. Inventory does not cause prices to come down. Supply and demand is undefeated, right? But a supply of forced sellers, people who have to sell, can cause a crash. Inventory that increases because people see prices so high and they think for that amount, I would sell my house, and they list it at a wish price that's really high and doesn't sell. Doesn't mean they lower the price. It means they leave it on the market because it doesn't cost to have anything listed on the MLS, or they take it off the market. What we need is forced sellers. What we had in 2008 was adjustable rate mortgages on people who borrowed more than what they should because they were using ninja loans, no income, no job, no assets. And they wrapped closing costs into the loan in a lot of cases and were borrowing 105% of the value of the property. So they were underwater on day one. Then their adjustable rate mortgage hit. Add to that a recession caused by the housing crash. 4 out of the last 6 recessions, home prices went up. It makes sense that in the one where the housing crisis caused the recession, home values would go down. After the housing crisis, rents went up. Buy and hold investors did really well. So right now, we're going to hear a bunch of people talking about inventory is up because there's less buyers this time of year. I've actually purchased all but one of my deals between November and February. One I closed on in the month of May, which was just a one-off. But a lot of times I close in the winter because there's less competition, which means less people looking to buy because there's less families trying to move in the middle of the school year, causing inventory to go up. That doesn't mean the prices came down. It just means it was easier for me to find a deal. Almost all of my properties I made list price offers on. I tried to negotiate down using my inspection report and finding out something like the seller was in the middle of a 1031 exchange to negotiate the price down. But it wasn't inventory. It wasn't forced sellers. Forced sellers are people who have to sell. And right now, there's not a lot of people who have to sell. Unemployment ticked all the way up to 3.7%. That's around 5 million people. If it goes up to 6, supposedly that's going to double and be another 5 million people looking for work. That would not be good, right? But over 4 million people have quit their jobs every month for almost the last year in the Great Resignation, and unemployment is at record lows. That doesn't mean people are quitting their jobs and just not working. It means that there's almost 2 jobs for every applicant, and people are changing companies because that gets you a bigger pay increase or work remotely benefits than staying in the same company does. We are not seeing a massive uptick in inventory that has to sell. We are not seeing days on market even close to a healthy market duration. You will see prices come down this time. This is when you should be hunting. You should be hunting in November and December too, when there are less buyers. Doesn't mean you don't hunt in the other months. I closed on May on a great deal that has better than a 10% cash on cash return. The purpose of this video is to let you know there is a correction going on. The anticipated, the planned for, the expected, the repeated every year, month on month correction that happens this time of year, every year. It's here. Surprise, surprise. I'm very sorry if you clicked on this hoping that I was going to say, here's all the reasons why there's a crash coming, and it's been a good idea for you to wait. Because I do watch some content on channels like Real Estate Mindset. Travis is very entertaining, great videos, and he has a perspective that's different than mine because I'm an investor and he's trying to become an investor. So hopefully we can learn from each other. But I see comments on his videos of people who say, I'm so glad I didn't let my girlfriend talk me into buying a place last year when we had 20 to 30% appreciation, massive inflation that you benefit from owning it. That person is probably still renting, not having cash flow, not paying down their loan. For some people, I get it. Your situation may be different and it might be a time to wait to buy. But if you're going to buy and you're waiting for the crash, the longer you wait, the more it's going to cost you. There will be a crash.
But not today.
Not today.
When that crash comes, just like the last one, the people who make out will be buying properties all the way down because nobody knows when the bottom is or when it's going to start to go back up. Remember, lenders are going to disappear if there's a crash. So if you're waiting to buy then, do you think you're going to be able to borrow the money to buy during a crash? When asset values are losing value, do you think lenders are going to lend on it? Do you think your appraisal is going to come in at what you need it to for the price that you had to offer? Because it could already go down by the time that you get under contract. It is always a good day to buy a great deal. You are going to be alive in 5 years. Start investing like it. Even if somebody purchased in the peak of 2008 with the highest prices, 5 years later, they look like a genius. Especially if they were buying a rental. I'm not talking to first-time homebuyers. My content is designed to help you reach financial freedom, which comes from buying investments. The goal of my videos sometimes is to entertain me, but it's to help you at least think. And I hope this video did that. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.